Hello, everyone, and welcome back to the latest episode of Real Take Real Estate with the Joseph team, where we give you our real take on today's housing market and everything to do with real estate. I'm your host, Maddie Maloney, followed by my co-hosts,
Joe Sambear
and Sam Feda.
So today we are going into a pretty specific topic, but we are going to be talking about gift tax. Now, we're not talking about the gift that your realtor may give you when you get into the home or the champagne or, any of those first-time homebuyer gifts with the home. We're talking about a gift that will be coming from a parent or a relative, if they're able to do so, that may help you with your down payment. So with a gift, there's a lot of questions and a lot of confusion that comes around this. So Sam, I first want to start with you is why do parents give a gift, and how does that kind of work with a mortgage transaction?
Sure, yeah. So it's quite common, that there are people that don't have a ton of cash saved up, but they do have good income and can afford the house and all that. So they'll need to reach out to a family member. It has to be a relative. It can be mother, father, grandparent, aunt, uncle. It just
can't be a good friend that's a billionaire or anything
nice
like that.
Yeah, as that would be, that's not an acceptable source. There are instances where we've had like long-term partners, if they're engaged or they can prove
significant relationship that's documented. Yeah,
exactly, an established relationship over a long period of time, that can be acceptable. But the common question we get asked a lot was the tax implications and all of that, which Joe will get into later. But it's more common than you think with family members giving a gift for people to buy a home.
Especially now when we're in a situation where home affordability is a hot topic. It is a lot harder now for first-time home buyers, for those looking to enter the housing market, to get a home because it's a lot harder to save money right now. So if parents are in the situation where they can give a gift, it is amazing, and it is one of the best gifts that you can give your children if you're in that type of situation, so that they can become homeowners. But those parents often come to us first and say, all right, so I want to be able to give this gift. It's a large chunk of money. There's got to be some other tax implications or ramifications here. What should I know about giving this gift? So, Joe, you are a CPA, you have a little bit of experience here. And also, whenever someone comes to us with this, we always say, get with your tax preparer, get with your CPA to advise you. But we do have people that we have gotten with to advise us on this. So, Joe, what, in your experience, are some of the gift ramifications and some things that people should know about with giving a large gift?
Yeah, I think this area, topic and finance, is one of the most misunderstood areas that I've ever seen, even from a tax perspective. I am a registered CPA, not practicing, so I'm not giving any tax advice. And we always say, get with your tax planners to get your actual opinion on taxation. But generally speaking, currently this year, anyone can give a person a gift. Can't be earned income or working for someone, but a true gift of up to $18,000 currently. So I can give you a gift for $18,000, and there's no record keeping of that. There's no need to do anything with that. So the person receiving the gift never will pay. Even if I give you $1 million, generally speaking, if it's a true gift, the person receiving does not have tax implications if it's a true gift. It can't be foreign. It can't come from foreign outside the United States. That's a whole different topic. But with that being said, then the question becomes, especially from the parent, a lot of times they'll say, okay, well, one parent can give $18,000, the other parent can give $18,000. So now we have a total here. And what if I want to give a gift of $100,000? And they get anxious about that because they're like, we really want to do it. We know we can do it. We want to make this happen. But then when the tax thought comes in process, they're like, oh, wait a second, this is going to really complicate things. I don't want to pay 50% tax on this, and so on and so on. Well, what's not widely known is when you do exceed the IRS annual exclusion for a gift, it just means you have to file an informational gift tax return with the taxable portion. So if it was $100,000, you subtract out the $18,000, so whatever the exclusion is, The difference would have to be reported in that gift tax return. It's informational only. So unless you're exceeding your lifetime estate gift exclusion, which currently is $13.61 million, and it will get
For your
adjusted
entire life, yeah.
for your total life from that one person to that person. So as long as you're not exceeding that, it's very rare where there will actually be a taxation involved. And so it's just an informational return that's required, and it's pretty basic. So that's why we always say, like, get with your personal tax, because obviously we don't know the history of gifts between these two parties. We'll say just get with your tax bureau, because really it's very unlikely there'll be a taxation issue, and that really gives comfort and concern. And I know there specifically there's a lot of cases where they would have given the gift, but they just had this in their mind that it's like, oh, we're gonna have to pay a bunch of taxes. We're gonna have to pay a lot of taxes on it.
Absolutely. All right, so we went over, what is the gift for down payment? What can this gift be used for? Can a parent give a gift that covers everything in the transaction? Is there ever a case where the buyer, there's the son or daughter, has to come up with a small percentage of their own funds, or can the parents cover everything?
Yeah, the parents can cover the 5, 10, 20% down, whatever they're doing, the closing costs, prepaids. They can essentially, the buyer can come up with zero out of their own pocket, and the parents or relative can pay all of the cost to close the loan.
There's been times in the past, Maddie, depending on different markets, so that's why it's always good to check in, because that hasn't always been the case. There's been some situations in a more difficult market where you had to come up with the first 5%, and then the gift could be after, and those things will change from time to time, but currently that is the case.
It can always change. That's with a 2-unit property. You do have to have some of your own funds out of pocket. It can't all be from a gift, and that's because it can kind of be considered a income generating property. So that's kind of where the gray area is a little bit, but just definitely double check with us. We can always look up guidelines and make sure we point you in the right direction.
Absolutely. I think another misconception that sometimes people have is that they say, okay, so my parents going to be providing the funds. Do I need to add them on my application? Do they need to be on the mortgage since they're providing the funds? And the answer really is no. As long as you qualify yourself with your income and you're qualified for this purchase, your parent doesn't have to be on the loan. They can just give you the gift. Now, if you need to be able to have your parents on the loan to qualify, that's a different case. Joe, do you want to go in a little bit more about that?
Yeah, I would say that, first of all, when we're talking about a gift, it could be in the form of assets. It can also be form of the real estate. So when you say, can they help with that? If I were actually to gift you the property and put you on title and take me off title, that would be the same kind of gift we're talking about. So the same numbers would apply. If I give you $200,000 property, it's the same standards. The $18,000 exclusion, you'd have to file the report accordingly. But I think one of the other things we should chat about, since we're on this topic, is what's documentation is actually required, because that can help with the understanding of if they have to be on title or not, or are they qualified. But typically, we would put the asset as a gift. We document it as a gift. They would need a signed gift letter saying, so we need to know who this is coming from. Is it a true gift? And then with most of the conventional loans we do, we don't really need to see, typically we don't need to see the donor's bank statements if we can see where it's coming from. So if I write you a personal check or I wire you money and it's very clear that it's coming from my account going to your account, and you can document that, that's acceptable. If it's just transferred and we can't determine that, we do need to see the bank statement so we can actually tie it all in. But we usually encourage, I think the simplest way to give the gift is actually to wire the money to the closing table or to provide a cashier's check. That we encourage it that way at the closing. It's usually the easiest way to actually give the gift.
Yeah, that's the easiest way to document. Then there's just a simple form stating there's no repayment implied, because that's the big thing, is we have to ensure that it's not a loan that they're actually taking out where they're going to have another liability each month with a new payment. So that does have to be documented with the form signed by all parties included in the gift.
And I feel like that is where sometimes some hiccups have come up before, is that maybe it's an aunt or an uncle saying, sure, I will give you this money, but they do expect repayment. And they can get a little bit uncomfortable when it comes to that gift letter, because in that gift letter that you are signing, it states that there's no repayment necessary.
Required. Yeah.
Required.
Absolutely.
And so you have to have that relationship where if you do plan on repaying, it has to be there because, according to the documentation, you are not required to repay that. So you just, it can get a little bit iffy if it's not a true gift or.
We want to be really transparent from the get-go and have that
Absolutely.
conversation. Encourage that conversation from the beginning.
Absolutely. And so as we go into a little bit more of the gift of equity, that is a little bit different, and some people can get a little bit confused in that process. So, the parent has this property, they want to be able to give it to their son or daughter, but maybe they just want to sell it to them. They're not trying to make any money off of it, but they want to just be able to sell for what they paid for it, but still helping out their children. But maybe the home value has appreciated and they're going to be gifting that appreciation value. How does that process work?
Well, I think what you have to do is look at it from the mindset of, okay, I'm going to sell you, my child, this property, and I owe this amount of money. What you really have to start thinking about is, think about it as a third party. Like, I'm going to sell this property to this person. This is how much the property's worth. That's what we need to start with. What is the real market value of this property? If this is a $200,000, and even from the gift tax perspective, this is a $200,000 property. And if you owe $100,000 and you're willing to sell it to them for $100,000, you're giving them a $100,000 gift. It's that simple. You just have to do the math and say, this is how much it's worth. This is what I want in return, or what I owe. This is the gift. And then everything becomes much easier, because I think sometimes it's overthought a little bit. So if you can just come from the perspective of what's the fair market value, how much is your net, or what you owe, or how much you want for this property, the difference is the gift, then we structure, that's how the loan's structured. So you have then, you can, a lot of times they'll go to a title company and they'll have a for sale by owner campaign, or there'll be a licensed realtor partner that we have that will help as a transaction coordinator structure the purchase agreement as such, and it should be written as such. $200,000 purchase, fair market value, and then they'll have a gift for the difference. And when you do that, then it really simplifies things.
And there's no real exchange of cash funds in a sense. It would be, if the property's worth $250,000, they sell it at $200,000. That extra $50,000 can go towards down payment, closing costs, and everything like that.
Yep. And just remember, then in that case, you would have to file the gift tax return.
Yeah, if it's over the $18,000.
And that might get missed.
Yes.
It's commonly missed, if I had to guess.
Exactly.
Always get with your tax preparer in these cases when it's anything about transferring large sums of money or transferring property like this. We will be able to advise in some cases and kind of give you, what we've seen before, but we're always going to advise you to go get with your tax preparer because they really know your full situation, how much you have gifted. But we're here to let you know that it's really not going to be as complicated as it may seem. And it's mostly going to be an issue of just making sure that it's reported. And that's really the only thing that you need to be aware of. Otherwise, if you don't report it, that's when there can become some issues, but it can be relatively simple.
And the seller side, when you're selling a property like that, you would also want to consult your tax preparer on, is there any gain on the sale? If it's a primary residence, there's exclusions, that pretty significant exclusions, so it's usually not a problem. But you'd want to ask that question as well. Now we've sold it at this price. Is there a gain that's going to be taxable?
Definitely. Awesome. So pretty short, a little bit of a niche topic, but this is one that can be so confusing to people and can kind of hold up a process and just have a lot of misunderstanding around it. So that's why we wanted to have a specific episode on this to really clear up that misconception about giving a gift, when it's typically used for, and just how to go about reporting that. So any last comments?
I think that sums it up.
Awesome. Well, you heard it here. Everything to do with gift tax, giving the gift of equity. If you have any questions or you just want to know about the process or just a little bit of advice on it, don't hesitate to reach out to us. We are always happy to have a conversation with you and to point you in the right direction on any of your home needs. So thank you for tuning in to today's episode of Real Take Real Estate. We hope you enjoyed. Please let us know what your thoughts are. Give us a review, leave us a comment, let us know what other questions you would want to hear, any podcast topics. But we will catch you next time on our episode of Real Take Real Estate. Thank you so much.